I get this question all the time. Term versus whole life insurance. It's honestly one of the most confusing, but also one of the most important financial decisions you can make. So today, we're going to cut through all the salesy jargon and just get to the simple truth.
Just let that sink in for a second. Seriously, I'm not talking about emotionally, that's a whole other thing, but just financially. Could they pay the mortgage, the bills? Would they be okay? What's going on, finance people? It's Josh here. Welcome back to JoshLM Finance. Let's break this down.
Okay, so let's start with term life insurance. And really, the absolute best way to think about this is that you're just renting your coverage. It's not a forever thing, it's for a specific amount of time.
It really is that simple. You know, like when you sign a lease for an apartment, you pay your rent, you get a place to live for a year. If you stop paying or the lease ends, you move out. That's it. Term life is the exact same idea. It's pure, simple protection for a set period. Nothing more, nothing less. And these are kind of like your standard lease agreements in the insurance world. Most people, and this is what I see all the time, they'll grab a 20 or 30-year term. Why? Because that covers a time when their kids are growing up, and their mortgage is usually at its biggest. It's a strategic move. And this is the number that just blows people away. For a healthy 30-year-old, you could get a $500,000 policy for about what you spend on Netflix and a couple coffees. I'm not kidding. It is incredibly affordable to get a huge amount of protection for your family.
So here's the key takeaway for term life. It is not meant to last forever. It's designed to be a financial safety net, a big one, during the years you need it the most. You know, when debts are high, savings might be low, and you've got little people who depend completely on your income.
All right, so let's flip the coin. If term life is like renting an apartment, then whole life insurance, well, that's like going out and buying the house. It's a whole different ballgame. So this is a permanent policy. You own it for your entire life, assuming you keep paying the premiums, of course. And just like a house, it's got an asset attached to it. It has what they call a cash value component, which is kind of like building equity. A piece of what you pay goes to the insurance part, and another piece goes into this little savings account that grows over time. And yeah, here's the sticker shock. Remember that $500,000 policy we said was like $30 for term? For a whole life plan, you're looking at something that costs as much as a new car payment. It is a massive, massive difference in price. We're talking 10, maybe even 20 times more expensive. Now, this cash value thing, that's the big selling point you'll always hear about. Part of that really expensive premium you're paying goes into this little account inside the policy. It grows, but usually very slowly, and it grows tax-deferred, which is a nice perk. You can even borrow money from it later. But you have to be careful, because if you don't pay that loan back, it can actually shrink the money your family gets. And trust me, it takes a long, long time for that cash value to build up to anything meaningful.
Okay, let's just be super clear here. This is not for most people. This is a niche financial product for very specific situations. We're talking about high-income earners who've already maxed out all their other investment accounts, their 401ks, their IRAs, and are looking at complex estate planning strategies. It is not a starter product by any means.
Okay, so now that we've looked at both sides, let's just put them head to head. A simple breakdown, so you can see the trade-offs, right there in black and white.
So let's just run through this real quick. Cost, term is cheap, whole life is expensive. Easy. Duration, term is temporary for that set period you choose. Whole life is permanent, it's for your entire life. Cash value, term has zero, it's just pure insurance. Whole life has that slow-growing savings account built in. And flexibility, with term you can pretty much walk away whenever. With whole life, you're kind of locked in, and if you try to cash out early, you can face some pretty big penalties. All right, so after all of that, what's the real answer here? What should most people, people like you and me, actually be doing? Look, this is really the bottom line. For the vast, vast majority of people, term life insurance is the smarter play. It gives you the most financial protection possible for the absolute lowest cost, right during the years your family needs that safety net the most. You get to protect them without completely destroying your budget. And of course, I gotta put this out there. This is all for educational purposes. I am not your personal financial advisor. So please, before you go and make any big decisions, talk to a qualified, licensed professional who can actually look at your specific personal situation. So as we wrap this up, I just want you to remember this one thing. This decision, it's not really for you. It's a final act of love and responsibility for the people who rely on you. So choose the policy that protects them, but without making your own life impossible today. Simple usually beats complicated. Thanks for watching till the end. If this helped you, you know what to do. I'll see you in the next one. Take care. Peace.